Hello bro and welcome back to the new stock evaluation video. So today we are going to analyze the Kroger Corporation with the stock ticker KR because this week they published earnings report, okay? And as always we are going to analyze this stock using our little Canva presentation that I prepared right now here. So let's begin, okay? First of all, why should you listen to me? It's very simple answer, bro. My name is Yasha and I will be your best investment advisor who will help you make smart decisions on the investment world, okay? Now this is me right now here. And additionally, bro, I know quite a few secret strategies that will help you outperform the S&P 500, which is literally the dream of every investor, okay? So if you are interested in that, click the first link in the description. Now let's proceed with the analysis. This is going to be very simple, straightforward and beginner friendly analysis without any bullshit whatsoever, because I do not want to be like your useless professor at your business university who just talks useless shit and doesn't teach you anything, and after all of that he is still broke, okay? Now let's begin. So as a complete beginner, bro, you should generally care only about the following 6 things, which are chart, profit, debt, money, value, and price, okay? Now let's begin with the chart. So for chart, we have here a little instruction saying that chart has to grow for all 10 years. Now, what does that mean? That means that first of all, we are going to write here, or let's say draw, we are going to draw here a little exponential line, kind of like this. And then we are going to compare the actual chart of the stock price with that exponential line, okay? And generally, the chart of the stock should follow that line as well, okay? So it has to grow, basically. It's that simple. Now let's compare it, okay? First, we can see that the growth was very high, and then it fell a bit, and then it increased again, and then fell, and then so on and so on and so on, okay? So generally, bro, you can see that the stock price had a bit of ups and downs, but generally it follows that exponential line. So chart is actually okay, okay? Now we come to the profit, and for profit we have instruction that the profit has to be in plus and it has to grow. Now here is the very same procedure as with the chart. So first we are going to draw an exponential line, kind of like this. And then we are going to compare the profit chart or net income, like basically net income is the same as profit. So we are going to compare the profit chart with this exponential line, okay? And the profit chart should follow that line as well. And what we can see right now here, it goes a bit up and then down and then massively up and then down again, up and down, up and down, up and down. So it actually does not follow that exponential growth. So the profit is not good. Now we come to the debt, and the instruction says that the debt has to be low, plus it has to decrease through the all years. Now what do we see here? Preferably we would want to see debt going kind of like this, so following that black line, but you can see that the debt here is actually relatively high and it also increases a bit. So the debt does not decrease and it's not low and it just keeps being at the same level, okay? So that's again a bad sign. Now we come to the money, and with the money I mean how much money do they have on their bank account. And generally, bro, they have to have more money than costs. Now, how do we know if they have more money than costs? It's very simple, bro. Just take a look at the bank account. They have $3 billion in plus. So it's quite logical, bro, that the money on their bank account is higher than the costs that they have. So that's a good sign, bro. We want to see the bank accounts in plus. So we are good to go in terms of that, okay? Now we come to the value, and we as investors, we want to invest in stocks that are undervalued, okay? Now we measure undervaluation by two little things. First, we measure P/E ratio, and then we take a look at the intrinsic value, okay? Now, as a complete beginner, you should generally care about that the P/E ratio is always lower than 15. Now, P/E ratio of this company, so Kroger, is almost 17, so it's still a bit higher than 15, which is not a good sign, but it's also not bad either, okay? So still I will mark P/E ratio as a bad thing. And now we come to the intrinsic value. So as a beginner, bro, intrinsic value might sound a bit complicated, but don't worry, okay? Because intrinsic value, as you can see right now here, it tells you what would be the fair price of this stock at exactly this moment, okay? So there are some complicated calculations going on in the background, and based on those calculations, we calculate what would be the fair price, okay? We take a look at the reports, we take a look at the earnings reports of this company, everything, and then we decide based on that what would be the fair price. So based on those calculations, bro, the company, so Kroger, should have the stock price at $72 at this exact moment. But the current price is $50. That means, bro, that the current price is actually lower than the fair price that the stock should have. So the Kroger is actually undervalued. Okay, my drawing here is very bad, bro. I'm drawing with the mouse, so sorry for that. But you get the general idea, okay? So the fair price is actually higher than the current price, so that's a good thing, okay? You also have here instruction, intrinsic value should be higher than the price. Now just compare the numbers, use your brain, and you get the answer, okay? Now we come to the price, and for the price, we also have here a general instruction that the price has to be lower than 150 euros, or dollars, or British pounds, whatever, okay? Because the reason for that is we don't want to invest in stocks that are too expensive, so below 150 is kind of the border that I decided for myself, and you can also follow it if you want. But yeah, the current price of Kroger is $50, so that's good to go, okay? Now let's come to the final evaluation, bro. As you can see right now here, we will actually just summarize everything that we found out about this stock, and then we should decide whether we will buy it or sell it, okay? Now let's begin with the chart. So the chart was growing through the years. You can also confirm that if you go a few minutes back, and then you will see that we were analyzing it. So profit was actually really bad. It was not consistent. It didn't follow that exponential growth. So I will mark here as a bad sign. Now the debt was also increasing, but also relatively staying the same all the time. They have money on their bank account. Oops, sorry. They have money on their bank account, so that's a good thing. The price, the value is, in terms of the P/E ratio, it's overvalued, but in terms of the intrinsic value, it's undervalued. So we are still going to mark this as overvalued, because whenever we analyze the stocks, we want to be as harsh as possible, okay? So since the P/E ratio was a bit overvalued, but the intrinsic value not, we will still mark that as overvalued, okay? Now the price is $50, which is below 150, so that's good to go, okay? Now, as you can see here, bro, we have 3 green ticks, and we have also then 3 red. I don't know what's happening with my mouse, bro. We have 3 red things. So now we come to the final decision, bro. Should we buy or sell Kroger? In my opinion, we should sell it, bro, because this company, based on the charts and based on the depth, like a bit more detailed evaluation that I did, is actually nothing special, you know. Also right now here you can see, bro, if we go through all of the numbers, all of the chart, you can see that it's actually nothing special, you know. Here it goes a bit down, a bit up, and then down, up and down, up and down. So chart is, it's, I don't know, it's mediocre. Then net income is also mediocre, nothing special. Debt is too high. Then they have money on the bank account, that's good to see. Then in terms of the P/E ratio, it's overvalued. In terms of the intrinsic value, it's undervalued. You know what I mean? Then price is also okay, but still, bro, I don't know, like I don't have that feeling with this stock. It doesn't seem something with a wow effect, you know. So for me, bro, I wouldn't buy this. I would just ignore this stock if I'm honest with you. So yeah, that's it, bro. Now, if you are interested in more stock market advice, more stock market evaluation, bro, click subscribe and join me on my journey towards the riches. Do the hard work, bro, and see you on top of the world.